Well, first, let's look at how silver has lost its sheen. It's the worst performing commodity in the Standard & Poor's GSCI gauge of these raw materials that we track here at Bloomberg. As you can see, this is how it goes. It goes gold, corn, and silver in that order. Losses on gold, well, they were the third biggest in that 24 commodity index, as you can see right after corn. Now, prices, they collapsed as some investors lost faith in precious metals really as a store of wealth, right? All of this amid this concern that perhaps the U.S. Federal Reserve is going to just slow down the pace just a tad of this stimulus. We always talk about whether they're going to taper perhaps in the month of September. But now it seems to be the case that exchange-traded products, otherwise known as ETPs, well, they could really foretell a change in terms of how silver is going to trade. According to James Steele, he is an analyst at HSBC Securities. He says investors in ETPs are holding silver, and guess what they're doing to gold? They're dumping gold. Now, I want to show you some chart that shows these ETPs, the holdings of the ETPs of silver. It increased, call it some 1.6%. So silver is that silver line on your screen. Gold is that gold line on your screen. And you can see all of this is happening while holdings in gold, they tumbled some 26%. Silver, well, investors continue to buy silver while the price hovers close to the levels that we haven't seen, call it, since 2010, really resulting in a July right here that's looking like to see the first month of increased holdings since, if you take a look, probably the February time period. Now, HSBC expects industrial demand for silver to actually climb. We're talking 3.4% from last year. All of this as the economic environment slightly improves. Looking even further, their forecast is 3.7% or higher, as about, call it, some 500 million ounces is going to be added. Why? Well, because of the more, call it, varied use of silver. It has a lot more industrial uses. So to give you a sense, about 50% of silver is actually used in industry to make everything from solar panels, batteries. Compare that with 10% in gold. Really, just gold is in jewelry if you think about it. Well, according to Steele, that's the analyst that we were talking about earlier, he says an investor does not know in the case of silver that there's a genuine industrial demand for it, and that's why they're willing to essentially put, call it, a floor underneath all of this. I want to show you how both those metals are trading. Gold so far this year, as you can see, looking like this. It is up, down 23%. And take a look at silver. It is off by over 35%. I am looking at year-to-date figures right there. Steele's forecast for silver is $22.90 an ounce from a previous estimate of when he had it smack dab at 21. Well, that is your global outlook on gold and silver. I'm Mia Saini in Hong Kong.